Closing costs on down payment assistance programs are not covered by the DPA unless you're using the 5% program, which has an extra 1.5%, or you have a lender credit from the pricing. So what does that mean? So these are FHA loans. They have standard FHA closing costs along with borrower paid comp if you're doing the loan borrower paid, which 99% of these are done borrower paid. So you have to make sure you're accounting for all the closing costs on a standard FHA loan, plus any borrower paid compensation. And if you're doing a program that results in a discount, that also gets added into the closing costs. So how does a borrower pay their closing costs? Well, if you're doing a 5% repayable, the 3.5% of that 5% goes toward the down payment, but that extra 1.5% goes toward the borrower's closing costs. So that can work. Also, if you price out a loan and there is a lender credit, that lender credit will go toward the borrower's closing costs as well. But if you have additional closing costs above and beyond that, the borrower must pay the closing costs either with their own funds, with gift funds per FHA guides, or you can use seller concession. So these are FHA loans, 6% seller concession is allowed. So the seller can pay up to 6% of the purchase price toward the borrower's closing costs. But those closing costs do need to be reviewed and do need to be paid just like on any other FHA loan. So make sure you really look at your details of transaction, add that information in your 1003 or your LOS system, and make sure you are discussing based on the program how the borrower is going to account for the closing costs, even on a DPA loan. So check out my insiders group on Facebook for more information on DPA programs, or follow my YouTube channel where I'm always posting these great videos about all the great programs we have here, which can really help you make more loans.